A comeback for Royal Bank of Scotland? Well, but RBS is doing better than investors expected. The government-controlled company posted a much smaller loss than analysts forecast. We partnered with the FT to bring you Lex on Bloomberg so you can get a sneak peek at the Financial Times flagship column a day early. Richard Stovin-Bradford joins us now from London with more. Richard, RBS is telling us that 2010 is going to be the last year of losses. Based on what you see, should we believe them?
Well, don't forget that 84% of the bank is owned by British taxpayers, so there's a lot of interest in this particular number. Yes, it's curbed its losses this past year, 2009, to 3.6 billion from over 24.3. But there are headwinds to worry about. And if you like, last year's profit was made primarily by the investment bank, and that's on cheap stimulus funding, cheap money. Now what we've got to worry about is whether that can continue. I think it'll be a more subdued year in investment banking this year. And although it started well in January, one month doesn't a year make. And I think now we need the commercial and retail banking side to take up the slack. However, the economy is flat on its back still, and so it's very much dependent on recovery.
Richard, you make some very good points. A couple of things that struck me about RBS this morning. The company saying that its core profits will decline in 2010, really the foundation of its business, and the losses, the impairments on its balance sheet are going to decline. So on the one hand, you've got the balance sheet improvement, but the real business doesn't look that great. What does that tell us about RBS in the years ahead, 2011, maybe 2012?
I think we're looking forward to a less risky bank. Stephen Hester, the chief executive, targeted a £500 billion funded asset reduction. He's 70% of the way towards doing that. But this is a bank that's going to become more reliant on its core retail and commercial banking. Probably 2/3 of earnings are going to come from that in the future. So I think what we've got to get used to is more modest earnings altogether. But the core earnings this year work out at about 5 pence. So if you multiply that by, say, a multiple of 10, that gives you 50 pence, and the shares are trading at in the 30s at the moment. So there is value in this stock, but the problem is that we've got to get through the economic recovery stage first. It is a much less risky bank, though, so that's in its favor.
Richard, we've got about 30 seconds to go. Tell me, what does this say for taxpayers? How close is RBS getting to the point where the British taxpayer may get something back?
I think they're going to have an easier time getting money back out of Lloyds Bank, which reports tomorrow. That's probably going to be about 2 years down the road, and that's wholly a play on the UK recovery. RBS, a bit more of a complicated business. Probably we're looking at 4 or 5 years, although bits could be done before then.
All right, Richard Stovin-Bradford from the FT's Lex desk in London. Richard, thank you as always.